within a business,
Mhm.
and you're kind of at the forefront of it, I would imagine, because the business model is pretty new of the Amazon like DSP providers.
Yeah.
Yeah, correct. And so roughly 2 years ago, they rolled out Amazon DSP 2.0. We all saw the white trucks driving around our neighborhood, and that was the 1.0 model.
Okay.
And Amazon got their metrics and got the financials and figured out, okay, we got a good baseline, and then they said we're going to tighten it up. And then tighten it up with the Amazon 2.0.
Mm-hmm.
And the way it works is you're basically a staffing agency for Amazon. You get carte blanche to the warehouse, you get carte blanche to the trucks. Your overhead cost is fuel, phones, payroll, benefits. But one of the requirements with Amazon was within 90 days of inception, you have to get to 50 employees or 50 drivers. Also,
wow. Wait, you have to go from startup to 50
0
drivers
to 50. Their
in
goal.
90 days.
That's part of their metrics. And they give some leadway. And Newark, New Jersey might be different than Newark, Delaware. So there's different leadways. But one of the requirements was to offer credible health insurance. And, you were talking earlier about referrals. So I had a client that was big in the telecom business, and his partner was big into kids entertainment, like the Moon Bounce business. And they merged together, and they both were experienced. So they were very easy to deal with. They both independently owned multiple businesses. I've helped them out in the past, and then they told me about the Amazon thing. And I formulated a plan where Amazon does have a preferred vendor, but the preferred vendor, and not knocking the competition, but they weren't indigenous. They weren't local. They didn't have, feet on the floor,
No.
locally, where I did. The other thing is their income requirement, their funding arrangement was set higher, and the employer was very uncomfortable with that cash outlay, that expense, because that could easily blow up their model, depending on how many people participate. So, I kind of I listened to both these gentlemen that I work with, and what the demographics of the group. These drivers are out on the road all day. They're barely in the warehouse, and they do have the cell phones, and they do use WhatsApp. And so what I did, I created a script where they could text the drivers, "Hey, we're offering, as of March 1st, we're rolling out these 3 plans. Gold, silver, bronze. The employer is going to pay X amount of dollars. The deadline to apply is this. Dignity Insured is going to be available, either at the warehouse, or they have a meeting called a stand-up meeting in the parking lot. So I would attend stand-up meetings at 5:30 in the morning, or go to the warehouse at 8 o'clock at night. The biggest part is chasing down these forms, and it's there's people that make things happen. There's people that watch things happen. There's people that wonder what happened, and it's the last two groups you're chasing all these forms. But what I did was I just made it easy. I helped $1,800 a year per head per person.
That's awesome.
So that's real savings.
Yeah, so I mean, if you have
and then there's premium write-offs.
50 people right away. I mean, you're looking at $60,000 a year savings.
In a perfect world,
if everybody signed up.
So what I found with this demographic is, most, not all, are coming from $8 to $10 jobs, and what happens is they go to a 15-hour job and they get benefits. But a lot of these people, not all, either had coverage through their parent, because most of the drivers are young, so you're covered at age 26, or they had coverage through the state plan, like Medicaid, Medicare. Or they just never had it before because they never felt the need. So I typically only get, so if I get a group of 50, I might get 15 or so.
Okay.
So I get, roughly.
That's still 18,000-ish, right?
Yeah.
In savings alone.
So
hard cost.
Right. But I tell the employer, because some of them I say, hey, you got to pay $200 a month. And they do the math. It's going to cost me $10,000 a month. I said, no. You're not going to get all 50 enrolled, because you might have it through your spouse. Some people have other jobs, believe it or not.
Well, it's a second job, right? It can act as a second job.
It can a second job, and then you're going to have people that fall off. But the reality is, I can give them, pretty accurate numbers. Hey, based on the size of your group, based on what you're funding, because I've had some say, hey, we're only putting in 150. I said, well, if you only put in 150, we're only going to get like 8 people to enroll. But if you put in $300, we're going to get 15, 18 to enroll.
So is it better to have more to enroll? Well, I guess to the eyes of Amazon? Or like, how does it work?
Amazon, I'm not sure. I don't work for Amazon. I just want to disclose that. I think Amazon is trying to do the right thing and trying to make these...
By mandating it.
By mandating that, look, there are, you could go into a deep dive, and one of the deep dives is, it's the old saying, if you're healthy, you're wealthy. Yeah. If you're working, you're active and you're staying healthy. So in doing this, it does provide them benefits that they may or may not have. So an active employee who's working is not chronically ill.